Hi दोस्तों, welcome to today's video. So this is our part 2 of basics of stock market series. Okay, we have already covered part 1, whose link is there in the description below. You can go through it. In the playlist you will find the part 1. Just a disclaimer before we start, any stock that we discuss in this video is not a recommendation. It's only for educational purpose. So let us start. So this is our agenda where I will cover with you what is the basic definition of a basics and on the fundamentals and technical analysis. What is the key difference? If you are really serious on investing, you need to know the primary difference between value, growth, and the GARP methodology of investing. Because if you don't know this, whatever you are doing will not really make sense and will not generate wealth for you. You can get rich, you can get money, but you cannot get wealthy. So there is a difference between value investing, growth investing, and GARP investing. We will talk about it. Five questions that you should ask before investing for yourself. We will go through it, and some key takeaways I will leave you from my experience of almost 15 years in the market. I will give you some overview about it. There is one very nice quote that I would like to start with is risk comes from not knowing what you are doing. Okay, so Warren Buffett has, he's a veteran investor. He has very nicely quoted this thing. Understand that in a stock market, when there is a volatility in a price, okay, stocks sometimes fall 40, 50%, 30% also. Okay, but how do we really sustain this particular fall, and how do we build the ability to hold this particular stock comes from only one thing, which is conviction. No one in the market really talks about this thing, but this is the main game changer thing, game of investing in the stock market. When your conviction is strong, you will find this minus 30% as an opportunity. But if your conviction is low, you will find this minus 30% as a scary, and you will exit this thing. So it's a game of conviction in the stock market. The more you build conviction, you will get through it. And in my channel, I'll be making many more videos about different fundamental analysis of the stock. Like in previously also, I've made three good fundamental analysis of three different companies. So likewise, which helps you build conviction and also helps you know how you should be really applying the fundamental analysis in understanding different companies. So there are two things we have to understand. First is the fundamental analysis of any company, and second is the technical analysis. What is the primary difference of them? Fundamental analysis is more on understanding the financial statements, such as company के balance sheets होते हैं, income statement होते हैं, cash flows होते हैं. Similarly, earnings क्या है, इनका growth क्या है, company के currently positions क्या है, company के products क्या है, what is the roadmap of the company, so on and so forth. So that is all about fundamental analysis. Technical analysis is not looking at the fundamentals, but it is only looking at the different charts. Okay, so price pattern, price action pattern, trading volumes क्या होते हैं, indicators, RSI, ये सारे छोटे छोटे कॉन्सेप्ट्स हैं जो टेक्निकल एनालिसिस में किया जाता है. Many people often rely only on fundamental analysis or on technical analysis. I am a firm believer that you should rely on both. Why is it? I'll explain to you in a summary section later on. This is also one very nice quote. We have to understand the importance of that. I'm sure 99% of the people don't even understand what Warren Buffett is trying to say over here. See, he's saying that price is what you pay and value is what you get. Okay, what is the difference between price and a value? Example, let's say I want to buy a phone. Okay, that phone costs somewhere around say 30,000. Okay, so this is a one quantity, one piece of this particular phone that I would want to buy. Now let's say I invested this 30,000 into a stock. It's not that I'm saying that you don't buy phone, but let's say I made a portfolio that where I'm investing 30,000. In a stock market is one such platform, one such market where your 30,000 can actually grow to say 1 lakh. It's possible. Yes, 3x, 5x gains has given. So when you get this 1 lakh, now you see what happens. You paid a price of 30,000, but the value that you're getting is not 1 lakh. Okay, understand. Value is not 1 lakh. Value is with this 1 lakh, you can buy three quantity of that phone. Now you have more ability to buy more quantities and more lifestyle, more luxury, more enjoyment, and all of those things that you get as a value in terms of your monetary growth, in terms of your value growth, wealth growth. So that's why Warren Buffett is saying that price is what you pay. This is what we pay. Okay, we pay 30,000, but what we get in value is this three quantities, not this 1 lakh. Don't look at these numbers. That's not important. What can get you value is your more ability to purchase more things and upgrade in your lifestyle and living. So that's what this message is. And that's market. Stock market is the only place where you can get all of those things. That's why investors has to be quite serious when it comes up to about investing. All you have to do is simply follow my channel, because I'm making many of such videos. Again, this is also a nice opportunity for me to tell you about these different channels. But definitely do follow, because you will enjoy a lot and you will learn a lot from these videos. All right. So let's talk in bit more about fundamental analysis. See, this is the foundation of making a informed decision. When a business starts, it invests some capital in the business. Okay. Then it buys some inventory. Then it acquires some customer. It has some vendors. Okay. All those different supply chain activities that is happening. All those different operations are happening. Financial activities are happening. Capex is happening. All of this thing is basically the fundamental analysis of the company. Not to be worried that fundamental analysis is complex. It is not really complex, but if you understand that in a structured way of how to do a fundamental analysis, it will be very much easy. And throughout these different videos that I will make along the way in coming years' time, you will get a good understanding of it. So please follow. So what fundamental analysis, the foundation of that is that you determine the value of the particular company. It helps you onto that, okay, so that you can make a potential gain. It encourages the informed decision making. That is the main thing. In you get a conviction by two things. You get a conviction through a fundamental analysis and a technical analysis. Okay, so this also has a conviction part. This also has a conviction part. But fundamental analysis helps you in your decision making through building that particular conviction. So it supports for a long-term investing. This is a very subjective and a relative concept of long-term investing. We will cover that in the future some videos. But long-term investing is not really true. In a way, if depending upon which methodology you're applying, as I explained you a while back, we will go through about value investing, growth investing, and GARP method. Each has its own specific purpose and a time frame of investing. You have to look to it and then decide whether you want to stay invested in that particular stock or not. So the fundamental analysis helps you onto that. It minimizes your investment risk. Definitely yes, because of conviction. Okay. It is all about assessing the business health. So this is more from a balance sheet standpoint, where you can understand the financial statements and you know the health of the company. Like कोई एक इंसान है who बीमार है, right? So doctor would come and check the health of that particular company. उसका टेम्परेचर क्या है, उसका ब्लड प्रेशर क्या है, उसकी सीबीसी लेवल क्या है, उसके विटामिन डी लेवल्स क्या है, सब कुछ चेक किया जाता है. So that is the health of that particular company, health of that particular individual. So that's what this balance sheet is. Fundamental analysis is studying about that, and as well as the growth. And also it gives a very good understanding of different sector and economical view of that particular company in which it belongs. So that's in just about what fundamental analysis is. But what is technical analysis? It is totally opposite. It is not looking at the fundamentals of the company. It is not looking at the growth of the company. It is not looking about at the historical what is happening. So it will not look at any of these things. So fundamental analysis completely ignored, and then growth completely ignored, valuation completely ignored. All of these things are completely ignored by these companies, where when we are often relying upon the technical analysis. So the where it helps, technical analysis helps in timing. See, fundamental analysis timing is very difficult. On the basis of fundamental analysis, it is quite impossible to say that this is the correct valuation of the company. But technical analysis helps you to understand, okay, technically I am seeing that stock is currently at a very good support point, which is like an accumulation point for me. It applicable. It is the best part of technical analysis, which I like, which is not the case in fundamental analysis. Is in technical you have the ability to apply these learnings of technical analysis on all the different asset classes. So if you have learned technical analysis, let's say to stocks, okay, you can apply these learnings to cryptos as well. You can similarly apply these learnings to forex as well. You can apply these learnings to commodities as well. So that's the added advantage of technical analysis over fundamental analysis, and that is also one of the primary reason why you should learn about technical analysis. Emotion free decision making, there is no emotion, because fundamentals often आप कितना भी मेहनत कर लो, you will not know everything about that particular industry or that company. However expert you are, even if you are investing 30 years in that particular industry all alone, that you can say, okay, this company is going to do well. That is not possible. Something or the other will have, like example, Trump will announced, आज के टाइम पे Trump has announced the tariff, okay. कल को जाकर कोई ग्लोबल वॉर हो जाता है, कुछ इशू हो जाता है, लाइक पॉलिटिकली कुछ चेंज हो गया, जैसे कोविड जैसी सिचुएशन आ गई, you never know what things will change. But technical analysis, technical charts, they don't lie. They will tell you the transparently correct picture as to what is happening that to that particular company. But you should be able to understand that message that the technical analysis is providing to you. So that's the crux of technical analysis. It is good for both short term and also for long term in some cases, depending upon how you look at your technical analysis, and as well as good for intraday trading. Very nice important thing technical analysis gives you, which fundamental analysis don't give you, is a pattern recognition. So in a way what this means is, see, smart, there are two types of money. One is a smart money, and then there is a retail money. Retail money, like individuals, you and me, okay, that is retail investors. This is our money. And then smart money is all about different institutions. Okay. So institutions and the smart money has much more access of the data, information, and direct connect with the promoters. So they have the ability to understand the crux of that particular company and then choose that particular company. So when an institution is choosing a company to invest into, they have done a complete due diligence, because even investing 1% of their total portfolio in that particular company is a big thing for them. It might look small because their 1% could be, say, like 100 crore. Okay. This is the case. For us, 1% would be like, say, अगर किसी का portfolio 10 lakh का है, तो उसका it's like he's just investing 10,000. There is a huge difference between investing 100 crore in a company and a 10,000 in a company. Definitely, the investors, the institutions would do more due diligence. But when they buy a particular stock, technical analysis is the only medium through which we understand different pattern, such as a flag and a pole pattern. Then there is an ascending triangle pattern. Then there is a zigzag breakout pattern. There is a consolidation and a breakout pattern. These are all different patterns which you see in the technical analysis, and that's why technical analysis is also very important. It is real time. That is also a good thing. If there is any breakout is happening, by the time the news comes out, and one could go and dig in with your working life to understand exactly where the particular why is the reason that the stock has breaking out today. By the time you realize, the stock would have already gone 20-30% up, so you have lost the real benefit that you could enjoy. But in technical analysis, that is not the case. You immediately see on a real time basis, yes, something good is happening in this particular company. So that's what this technical analysis is. So fundamental analysis, we understood about it, what it does, and also technical analysis. Often I want to summarize this point over here. Often people fight. I have seen many of my friends and colleagues as well. They really fight that, forget technical analysis. It does not really matter. Only fundamental analysis is required. We don't want. This is class A of people. Second class of the people say, forget fundamental analysis. We don't have time and we don't even understand. Chart is enough for us to tell us, which is also good. Both are right. I'm not saying both are wrong, because fundamental analysis, these people have their strong conviction on the thesis that they have studied, but there are some drawbacks and benefits both of it. And similarly, technical analysis investors, they also have a conviction on that particular stock, because they have done and experienced of how the stock really performs when it forms different patterns, as we saw a while back. I always prefer the third approach, okay, to go with both. There is no harm. There is no competition between me and my friends, like you and your friends and other members as well, that you have to do only fundamental analysis. No one is shooting head, putting a gun on your head and shooting to you. They're all just going ahead and explaining to you, okay, go ahead. You can apply any of this logic. We are here to make money. So it is good for us if we build our conviction in both these methods. So you should be studying both fundamental analysis and as well as technical analysis. I will be recently launching a technical analysis course as well, whose whose link will be available on my YouTube page as well. Shortly, I will be releasing that link. So do look into that technical analysis as well, and as well as for the fundamental analysis in the coming months' time, I will try to release that too. I'm already working on that. Now, as we move ahead, these are the ways, three types of investors you will find of how they really perform. So, media map, you will hear many times that, oh, do value investing. Some will say growth investing. Very few people will say GARP investing. Let's understand what is the primary difference between when they say all of these things. I want you to keep your focus only on this first part for now, which is value investing. So, what is value investing? See, a company, when the stock price goes, this is the particular level. Let's say this was 100 rupees. We know the fundamentals of the company are going to be more or less same. It's not that the company is going to grow. So if company is generating, say, 100 crore of revenue, next year also it is going to generate 100 crore of revenue. Maybe next year it will go to 105, 110 crore. So there is not going to be a big change in the company over next 3 to 4 years of time frame. But we understood that because of some bad macro indicators or macroeconomics, market has corrected and the stock has fallen down to 70 rupees. So you see, there is this gap between 70 and 100, which was created. So at this year, say, let's say this was 2022. At the year of 2022, this company was valued at 100 rupees, and that was the peak over here. So when the and next year also it is projected to be same, but then the price has fallen down due to some bad economical condition. So it creates a value for you. So you're investing a stock which is worth of 100, like product just which is worth of 100, you're getting it for discount at 70 rupees. So you invest in this stock only till the period that the stock goes back to 100. This is what value investing is. Above 100, I don't know. We have to look at the fundamentals of the company and then say whether the stock will cross 100 or not. But right now, value investing is all about buying something which is worth 100 but for the value of 70, and riding this 70 only till the stage that it goes back to 100. Investors move out of this particular stock when the price reaches 100, because the next year result, almost say 2023 ka result is going to be same, 2024 ka result is going to be same. So there is no point in rewarding this company and it go back to 110. It is our bad emotions and heavy expectation that we expect our stock to go for above 100. But then we don't understand what type of investing are we doing. Are we investing doing value investing, growth investing, or a GARP investing? So that's what we have to understand, that that's the meaning of a value investing. Okay, so you invest only to a particular point and you exit upon reaching that particular point. So it can happen, say, in 1 week, 1 month, 1 year. So whether it is a short-term investing, medium-term investing, or a long-term investing, you decide it at your own will. But that's what value investing is in simple form. Okay, so we buy something which is undervalued. What is growth investing? Growth investing is little different. Okay, which I really like. I rather like the third one, which will come. Now, keep your focus upon the second strategy, which is growth investing. So, growth investing is these companies, very less likely you will have you will be able to find companies which is really being available at a cheaper valuation, because growth investing stocks are almost known to everyone in the market, and they will always be trading at a premium. So let's say the stock is already performing and it has reached to say 120 rupees. Okay, now, because of the expected growth of the company, say it was 100 crore, next year it could be 130, after that it could be 170, and after that it could be 200. We know in 3 to 4 years time the line, the revenue of the company is going to be 2x, and there will be some margin expansion, then will be profit growth. So this stock, which is currently trading, let's say at a PE of 50, it could be possible that after fourth year also it will be trading at a PE of 50, but the stock price could have gone to, let's say, 400. This is growth investing. You don't look for a value buy. In growth investing, the concept is very different. In growth investing, you don't focus on selling the stock at a higher price. You focus on buying the dips. So as and when the stock corrects, you will immediately buy, because we know there is a strong growth story available in this particular industry or in this particular structure. So mentality itself changes a lot for an investor, which you have to also focus upon, that when you are investing for a growth investing, example आज के time पे है, railway sector is expected to do well. Okay, energy sector is doing well. You know the stock is in energy sector, it will grow well. Whatever you do, but it will grow slow, but it will certainly grow well. So you will look for an opportunities to buy on dips, not on sell on rise. So these are two different thought process which you have to build with growth investing. And third and the last one, which I really like, is the GARP investing. GARP is a mixture of strategy 1 and strategy 2. That means growth investing, okay, but which is available at a value level. So that's what it's like, growth investing, growing asset at reasonable price. That's what the meaning of GARP investing is. So we pay a fair price for a good growth company and not cheap or overpriced. So that's the meaning of growth investing. We know that the stock from here, from 100 level, could go to 300 in next 3 years time frame, which will be almost 2x return on my over and above my portfolio. So I want to focus over here that moment it falls to 60, 70, 80, or even 90, I should see this as an opportunity and not as a fearful thing. So that again comes with conviction. But that's the main primary difference between value investing, growth investing, and GARP investing. I often rely and follow upon GARP investing, but it requires a lot of research and finding the companies, because you have to study a lot of companies to understand whether in which bracket it fits. Sometimes I get value investing, I play on that as well, and sometimes I get growth investing also. So it all depends upon your conviction and understanding about it. So top 5 questions before you buy or sell any particular stock. This is important. Many people exit that particular stock only upon reaching a particular level. It is good to do that along with the technical analysis. Okay, so once it reaches say 100 rupees, you have bought it at 70. It's good time to exit. Yes, it's totally respectful, but at that time you should always, if you are making a blend of both fundamental analysis and technical analysis over here, okay, then in that case you have to understand. Firstly, you should know is, how do I understand this business completely? Okay, before you go into the fundamental analysis, what is the valuation of that particular stock? Whether it is undervalued, overvalued, which strategy am I applying on this stock? Is it value investing, growth investing, or a GARP investing? You should know this very clearly. Then, am I reacting emotionally? Is it that the stock has gone from 70 to 100, so I should just emotionally go and buy? People often buy at 100 and then again it comes down at 80, and then they regret why I am falling. Because when it was available at 70, your fundamental that you have studied or technical you must have studied, it would be almost same, right? So you should have bought it at 70 and not 100. So it's all about knowing the conviction and building onto it, which you will gradually increase as you are following this particular channel. So stay tuned. You will definitely learn over a period of time. And am I reacting emotionally or not? So these are some emotional parameters. In fact, there is more things psychologically that we have to understand on the particular stock market and the industry and the companies more than the fundamental thesis. I will hopefully cover that in the coming time. Is this a long term play or a short term play? This is something you have to understand. More than that, you have to understand what is the valuation that the company would get and how much the company could grow. So it could happen in a 3 weeks time or it could happen in a 3 years time. So it depends. It does not matter. As long as you're making money year on year, 2 years, 3 years down the line, you are going good. Does this align with your financial goals? It should not hinder, because if you're investing in a particular stock for 3 years, after a lot of research, you understood that, okay, boss, this is really a stock which can give me 5x return in next 3 years. I found this thing. So you invested almost say 2 3 months of research in identifying such stock, because such stock is not that you're investing research in only one particular stock. You would have studied almost 10 to 20 such stocks, and out of that you have liked one. Okay, so you invested into that, but then after that you understood that, no man, this say 5 lakh that I'm going to invest, I would need it in 6 months. So what you're doing is, yes, definitely you're learning, which is a good thing, but it is not really aligning with your financial goals, right? Because you are investing your time in researching a particular stock and finally making a decision that I'm going to need that money, then it's like a waste of time, right? So, but there is just a waste of time. It's not a waste of learning. It will help you out, but just it is important to assess the financial goals as well and how much of a risk tolerance you want. Because when a company goes 5x, it will see minus 20, minus 30% of dip in the particular stock, and you should have the conviction to hold to it. Okay. So the bonus tip is always zoom out, look at a bigger picture, 1 year, 3 year, 5 year, because it does not matter. Say company goes 3x in 3 year, that means it is growing at say 40, 45% of CAGR every year. Okay, which is very good for a company to have against the different available option of fixed deposits, which you get only 7%, or maybe index fund at 10, 12%. Okay, so that's a game that investors really pay. Professional investors play this game. Okay, if you see FIDIs, they don't really trade just buy today, sell tomorrow, buy today, after sell 2 weeks, 3 weeks. Some portion of their portfolio, if they're churning it and they are permitted, they do that. If not, then that's how the mechanism is for a really good investors to generate wealth. That's about it. So investing is, it's not about growing and becoming rich quickly. I will explain you one concept over here in a stock market which I have learned with my experience. If you go too fast, okay, in the stock market, it might take 25 years for you. Okay, but if you go slow in investing with your thesis study and appropriately, it's okay if you're not able to invest all of your money in just this 1 week or today. You take it next 4 or 5 months to build your portfolio. That's fine. But when you go slow, it will take 15 years for you. So there is a big difference between going fast and going slow. Because if you go fast, you will take some emotional decision and it will take 25 years for you. And if you go slow, you will take a rational thesis study based decision, which will take you 15 years. So it's quite important to really go slow in the stock market, gradually go on allocating your investments as and when you find an opportunity. It's okay. 5 to 10% of movement in the stock is not a big thing, guys, if you are really very serious about building wealth. I would like to leave you with only that point. If you have liked this video so far and you are, please subscribe. Watch this video, share this with your friends, like and comment, so that in comment especially, because so that I get an understanding, yes, you're liking more of such content. And the link is also there of my Instagram handle, where I post some basic things. I'm not much active there, but I post some basic things where you can follow me on my Instagram as well. Thank you so much, guys, for watching this video. I will see you in the next video. Bye bye, guys.